Right. So today's lesson will be on partnership. So yes. Now, so far all this while we have studied sole trader of a business whereby the business was owned by one person. So in a sole trader setup, all the profits or losses goes to that one person that we call the owner, right, or the proprietor. So usually, when businesses do well and the owner, the sole trader, cannot handle everything by his own or her own, then it's necessary for the sole trader to move on to set up a bigger setup called partnership. So partnership is the next level after sole trader. Okay, so in partnership, there are a few terms and definitions that you need to take care of. So this time, the owners of a business are referred to as partner. So when I use the word partnership with the word with extra alphabet ship, that means I'm referring to the business. Okay, partner refers to the person, the owners of the business. So in a partnership, minimum you can have 2 owners. Maximum, well, in real life, it can go up to 20, 25, 50, but for exam purposes, usually 2. Once in a while, they might give you 3, but 3 is normally for A2. Okay. The reason why they don't give you more than 3 or maybe more than 2 is because there won't be enough time to do the questions. So most of the time, you can expect 2 partners. Okay. So why are partnerships formed? Well, as I mentioned just now, when the business is doing well, the sole trader wants to expand the business, so they need more capital, because as a sole trader, the capital might not be very big, and if they want to expand the business, they might need a loan. So the bank might not be able to give the amount of loan required. So hence, we bring in more partners, form a partnership, bring in more partners. Okay. In addition to raising more capital, it's also to share knowledge, contribute knowledge. Okay, for example, let's say a lawyer, a lawyer operating as a sole trader, he has his own business, but he's the only one running the business. Then more and more clients come in, so he cannot cope up. So he would invite maybe his fellow graduates to become a partner in the business. So maybe within the lawyers, one might be good in a criminal section, one might be good in the housing section, so they can contribute more knowledge or experience to each other. So they can offer more services. So maybe last time the lawyer, when he was operating as a sole trader, he was only offering lawyer services for housing section. When people want to buy a house, you need to make the house legal to your name, so you need the services of a lawyer. So now with the partnership, they can offer more services. People can come them for criminal cases, for example. Okay. Another reason is partnerships are formed to cover each other. You see, when businesses do well, of course, a lot of money comes in, but sometimes you need to take care of all of this and you might not be able to go for holiday. So that can be quite frustrating, right? Right. So that's why people form partnerships so that the partners can cover for each other. Okay, and then maybe other reasons. Yeah. Okay. All right. But there are some disadvantages to a partnership. So among the disadvantages is, you see, when you have more than one partner, previously when you were a sole trader, you as a sole trader can make decisions on your own. You don't need to ask anybody. But now, when you bring in a partner, you cannot make decision on your own. You need to get the approval of among your partners. You might agree to an idea, but if your partner doesn't agree, then that idea would not go forward because everyone contributed money into the business. Okay. For example, one partner's idea of putting the company in the right direction. Maybe one partner might want to spend for some future development. The other partners might not agree, citing reasons that we can use the money for something else. Right? Okay. So, yeah. And then partners have unlimited liability, just like sole traders. Okay. So earlier you're a sole trader, you have unlimited liability, but you are in full control. Now, as a partner, also you have unlimited liability, but you're not in full control because there's more than one partner. Okay. Now, so because there more than one owner in a business, so everyone needs to follow rules and regulation, terms and conditions. So that's why when a partnership is formed, they'll make an agreement. Okay, in real life, this agreement is a very boring, long-winded letter to look at, but in a question sense, they'll give you just the important information which is contained in the agreement. So you don't need to worry too much about that. But among the usual information contained in an agreement would be how much capital each partner has brought in, what's the rate of interest on any partner's loan to the partnership. You know, when partners lend money to the partnership has to pay them interest. So the rate of interest will be defined in the agreement. So whatever terms and conditions, as in a normal agreement, will be contained in the agreement. So in a question, they will tell you what's the terms and conditions that we need to use to solve the question. So usually it's like 3 or 4 lines only. Okay, and sometimes, no, not sometimes, sorry. Most of the time there'll be interest on partners' capital. So why is interest paid on partners' capital? Because to reward partners on contributing their capital in the partnership. Otherwise, they could have put their capital elsewhere to gain more money. They could have put in the stock market. They could have invested anywhere, right? Yes. Okay, but in a partnership, when partners withdraw, drawings are allowed, but it is discouraged. So usually interest will be charged on drawings. Okay, so we'll look at the question to see what's the interest rate on that. Okay, and then according to agreement, some, if not all, partners are allowed salary. Sometimes salary is given to all partners, sometimes it's given to just 1 or 2 partners, not all. Okay, this might seem to be unfair to you, but usually the reason why sometimes salary is not given to all partners is because among all the partners, maybe 1 or 2 only be very active. They are contributing more than the other partner. So therefore, it's all agreed by everyone that salary is only allowed for this kind of partner. So whatever it is, we do not question the agreement, but we rather accept the terms and conditions and use it to solve the question. And lastly, this is the important thing, how profits and losses will be shared. So they will normally give you a ratio. For example, if it's 3 partners, if profits and losses shared equally, then it could be 1:1:1, which means 1/3, 1/3, 1/3, or any other ratio. Okay. Okay, now what if there's no agreement made? Okay, if the question tells you that there's no agreement made, then what I highlighted in red only applies. I repeat what I highlighted in red. We actually have to follow. If there's no agreement made, then we follow what is called the Partnership Act 1890. So this is something which happened in the year 1890, like more than 100 years ago. During that time, there was a case brought to the court that there was no agreement made. Okay, and then the partners were disputing about how to share the money. So at that time, the judge, decided to solve the case in the following way. The judge said, okay, since no agreement made, profit and loss to be shared equally. If partners lend money to the partnership, the interest on loan is 5%. So this 5% you need to memorize that. Cannot change. So only these 2 things apply. Apart from these 2 things, although I put here no interest, you can choose to not remember the white one because only the red ones apply. I think that's easier to remember rather than remembering what is not allowed. So even if partners contribute capital, we don't have to pay them interest on capital. Even if partners took out drawings, we don't charge them drawings. Salaries are not allowed. So just remember the red one. Okay. All right. Okay, now accounting is not complete without financial statement. So how does the financial statement look like for a partnership? So a partnership will prepare a statement of profit or loss just like a sole trader does. But after statement of profit and loss, they will prepare something extra called the appropriation account. So we'll look into the format of this now. Okay, so what you're seeing here is the same as a sole trader. Everything is the same up to the point of profit for the year, profit or loss for the year, up to this point. So for sole trader, it stops here, isn't it? Right? And after you calculate the profit or loss, this profit or loss figure, you will take it to the SOFP, right? But you do not do that for a partnership. After you prepare this, okay, we need to prepare this. Now, the format given here is I put everything together in one, but nowadays questions are phrased in a way that maybe part A, they will ask you to do SOPL. Part B, they'll ask you to do this separately. Okay, so go with the question. Normally nowadays it's not, you don't do it together. This section is done in a different part. So when that's the case, you have to start back with the profit or loss for the year, you know. In part A, if you're asked to do SOPL, your last line is profit or loss, right? Let's say 10,000. So in part B, if they ask you to do a statement of what do you call appropriation, you start with the same 10,000, regardless of whether that figure is correct or not. Okay, right. Now, what is the appropriation account? Now, the appropriation account tells you how this profit or loss is divided among the partners, right? And we see it from the partnership's point of view. So you notice I would have put here add and less. So add means, for example, interest on drawings. Why did I put add? Because this is something that the partnership charges the partner. So if you see it from the partnership's point of view, it's a revenue because partner has to pay partnership. Okay, so make no mistakes there. So this should be add. But if you're preparing this in a T format, then these figures will go on the credit side. It's credit is revenue. I'll show you that setup later. Okay, whereas these two, interest on capital and salary of partner, is something which partnership is paying partner. So it reduces the profit, isn't it? Because they have to pay the partner. It's like an expense, right? So that's why less. Now, after adding and lessing, you might have a balance here. This balance can be a positive or a negative figure. If it's positive, then you use the word residual profit. Okay, if this figure is negative, then you call it a residual loss, which means you calculate and see whether this figure is positive or negative, then you use the correct term accordingly. Okay, now what do we do with this figure? We need to, how should I say, zeroize it. We need to give it shade among the partners, and that's where the profit loss sharing ratio comes in. Okay, so you share. For example, if this is 9,000, for example, and the question says each of them gets the same. So here will be 3, 3, and 3, right? So these 3, 3, 3 will add up to 9. So 9, make sure when you deduct here must be 0. Okay. All right.